Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on? Well, let's think about this market. The market came down, right? And we have rallied 18% off of the low. So we've rallied up 18%. We've come right up to the 200-day moving average, and we've got resistance. Now it's going to take a little bit of a push to get it through there. I don't think we're going to get through it this time. Maybe we jump above it for a day and come back down, maybe for 2 days and come back down. Maybe we just start to come down from here. Now, I don't think we're going to go all the way back down. I think the low is in, but we will come down. We'll make a higher low, and then we'll make another attempt at the 200-day. And that 200-day eventually is going to get taken out. Now, it may take some time there before we get back above the 200-day, or it could happen tomorrow. If we got a deal with China, we'd be up at a new record high instantly. But a new record high, in my opinion, is probably going to take a little bit of time. We're going to come back down, and then we're going to push up higher, push through the 200-day, take us back really close to that record high, maybe even overshoot the record high, giving you a last chance to get out before the big bear market starts, before the big crash starts. And believe me, in my opinion, there's going to be a big bear market that's going to pull this market down 50, 60, 70%. We'll see how that plays out, but not yet, not yet. No. We're going to push it up higher. We're going to push that Bitcoin up higher. We're going to make all these new record highs, sucker everybody in, let them think that everything's okay. Then the rug pull is going to come, and then we're going to head lower. That's just my take. I know yours is probably completely different. That's okay. What I want to talk today about is, I want to talk about how we live in this crisis system. We're in a crisis system. Now, a lot of people think that everything's fine, that the Donald, he's got it all figured out. He's got everything under control. Everything's going to be good, right? Not my take, not my take. We are living crisis to crisis to crisis. We have a desperate government out there right now. Yeah, I can tell you that just by the tariffs. The tariffs is a sign of desperation to raise money, bring in money, more money to the government. Now, we pay a lot of taxes, right? I mean, we got federal tax, we got state taxes, we got local taxes, we got sales taxes, we got taxes on top of taxes. We got the inflation tax, which is the everything tax. They tax. But they don't have enough money, right? I mean, we print about an extra $2 to $4 trillion every year, right? That we don't have. We don't have the money, so we got to get it coming in somehow. So the tariffs bringing in a little bit of money, right? Okay, so far the tariffs are subsidizing all the government spending. Believe me, there's going to be a lot more spending, and we're going to talk about that today. We're going to talk about the bailouts that are coming. Why are there going to be bailouts? Because we're in a crisis to a crisis to a crisis. Everything is not fine, no matter what the mainstream media wants to portray it is, right? They want to tell you everything's going to be okay. They're going to say, look at the stock market, it's going to a new record high, but everything's not fine. Everything is so far from fine. You see, we have the bigger bubble syndrome, right? I mean, the more money they print, we talk about that, $2 to $4 trillion of printed money, right? And we get the bigger bubble. They blow the bubble bigger and the bigger. We haven't had a recession. When was the last recession we've had? Back in 2008. You see, the Fed doesn't want to let a recession happen. Now, you see, they're Keynesian economists. They think recessions are bad. Us Austrian economists, we think recessions are good. It flushes out the bad businesses, flushes out the bad investments, lets the market reset, and then you kind of continue up higher. But what they're doing is no recession. Big crash is coming, and that crash is coming very fast, right? But there's going to be bailouts, not to worry. But the bailouts they're not going to be for you, not going to be for me. No. No bailouts for me and you. Who are the bailouts going to be for? Now, this is really going to upset some people, but their bailouts are going to be for the hedge funds. Hedge funds, can you believe such a thing? I cannot, but that's the plan. The plan is to bail out the hedge funds. Now, the reason they have to bail out the hedge funds is because the banks and the hedge funds are now tied together. The hedge funds are the ones that go to the casino, they gamble, right? And if they win, they keep the profits. If they lose, well, they don't pay the banks back. You see, they're leveraged. They're leveraged some as many as 100 to 1. 100 to 1 leverage. They're in the casino gambling 100 to 1 leverage. If they don't win, well, they don't pay the banks, and then the banks go down. So there is actually 10 trillion being planned right now to bail out the hedge funds. I mean, that is sickening to me, but I don't think it's going to be enough. No. 10 trillion is not going to be enough this time. You see, every crisis, there's got to be more and more and more, right? We're in such a big mess right now that $10 trillion is not going to be enough to bail it out. 10 trillion, 20 trillion, maybe borderline, but I think it's going to be closer to 30 trillion. But Mike, we're already 37 trillion in debt, and they're going to pump 30 trillion in all at one time. Now, what's that going to do? Well, it's going to send hyperinflation for sure, right? I mean, that's going to be coming, but they're going to bail out the hedge funds, which then saves the banking system, because they have to bail out the hedge funds to save the banking system, but they're also going to bail out the insurance company. The insurance company is going to need a bailout. The big one that's really going to need a bailout, unbelievable, the pensions. Now, what's a pension? Well, it's a retirement plan, right? Well, me and you, our retirement plan is Social Security, and they're going to bail that out too. That's part of the $120 trillion in unfunded liabilities, right? So they don't have the money. See, we paid in Social Security for the last 40 years or so, right? And now it's time to take the Social Security, and they kind of go, but we don't really have your money. Well, they're going to get your money, right? How are they going to do it? They're going to print, right? They're going to print the money. That's part of the bailout that's coming. They're going to bail out Social Security. But what about the private pensions? Now, here's the thing. There's a lot of pension envy, let's call it. Pension envy. You see, some people have a pension and some people don't, right? I mean, okay, some people just, maybe they're just, I don't know, maybe they're a plumber and there's no pension set up for them, as opposed to someone who's a teacher and there's a pension set up for them. But guess what? The pension is severely underfunded. They think they're going to get 100% of their payment. Do you realize some pensions are only 10% funded? 10%. Now, the good ones are 70% funded, right? That would be a good pension. Means you're going to probably see 70% of your expected payout. Now, how did it get this way? Look at the markets at a record high, real estate record high. How are the pensions so underfunded? Well, here's what really happened, right? They overpromised. They go, you contribute this, we'll invest it, we'll make 8% on your money for the 30, 40 years you're working, and then we'll give you the payout, right? Well, these pensions, they didn't make 8%. They didn't do anywhere close to that. Now, that's a problem. What they invest in? They invested in government bonds, one of the safest things, right? Those went down about 30, 40%. They lost all that money. So what are they doing? They're going farther and farther and farther out on the risk curve, right? They're taking more and more risky bets, right? So they're in the stock market, right? Okay, could be risky. That drops, it's all over. It's all over. Pensions don't have any money. But if you go to a state like Kentucky, the state-run pension is funded about 10% of what it's normal to pay out. So if you're in the state of Kentucky and you're part of their pension, you're going to get about 10 cents on the dollar for what you were expecting to get. You see, these pensions don't have the money. They overpromised and they underdelivered. Okay, now here's part of the reason they underdelivered. Wall Street, those are very evil people. You see, to manage these pensions, they're taking 3, not 1%, not 2%, 3% to manage these pensions. So they don't have to make 8%. They'd have to make an 11% return to cover their costs at 3%. They got these costs. But that's not the only way Wall Street's fleecing the pension funds. Here's the thing. You see, there's no regulations on these pensions, meaning they can invest in anything they want. Do you realize that there are pension funds out there that invested in Beanie Babies? Beanie Babies. I'm not making this up. This is facts, right? Right now, those pensions are investing in crypto. Some of them bought Trump coin. Some of them bought Bitcoin. Some of them bought Ethereum or other cryptos, right? Don't worry, that's only about 10% of the money's been invested in those. At least the Beanie Babies tangible. You could probably take it home and play with. I don't know what you're going to do with the crypto when it goes away. What are you going to do with your Trump coin? They sold billions of dollars in Trump coin, lost about 80, 90%. Melania coin, same way. What are you going to do with them now? What about those NFTs? Do you realize that some of these pension funds invested in NFTs? Now, I think it's cool to have a digital picture of Steph Curry eating Wheaties, right? Because he's a champion. Okay, well, that's cool, right? But a digital picture, what good does that do me? Cost about $75 to buy one of those. What's the value when you go to sell it? Who would you sell it to? Would you be stupid enough to buy a digital picture of Steph Curry eating Wheaties? Don't get me wrong, love Steph Curry's. Warriors just won that Game 7. I'm a basketball fan. Love the NBA, love the playoffs, right? But would I pay $75 to see Steph eating cereal on a digital thing? But Mike, you don't understand. There's just one of those pictures here, one here, one here, one here, one here. They sell as many as they want. What's the value if you paid $75 for that? I'd put the value close to zero. These are called alternative investments. What they're called in the pension language is private equity. You can invest in private equity. What else would private equity be? It would be an piece of art, let's say. Let's say Hunter Biden, he paints some artwork, right? And you paid $4 million for one of those Hunter Biden paintings. Okay, well, now it's time to sell because the people in the pension, they want their money. How quickly can you sell that $4 million painting for? I don't think you can ever sell it. And if you can, you're not going to get your $4 million back. This is private equity. This is what the pensions are invested in. This is scary stuff, right? It's illiquid. You can't get rid of it. It's on their books at $4 million when it's really worth about zero. This is what's going on in the world of the pensions. There's no regulation. But don't worry. Just like the banking system has the FDIC, which has less than 1% of every dollar that's deposited, they can't insure your money. You got less than a penny of every dollar, less than 1 cent. They're not going to give you your money back when these banks go down. No. Well, what has the pensions got? They got the PBGC. Now, the Pension Benefit Guarantee Corporation. Once again, a government entity. I believe it's government. I don't even know if it is or not. But anyways, they don't have the money to back the pensions, but that's their job. Who's going to fund them? Well, that's the thing, right? There's going to be the bailouts. We're going to get the bailouts. We're going to start cranking the printing press. Look, we're 37 trillion in debt. We don't bring in enough money to pay the interest on it, so we crank the printing press. What we got coming out in September? I think it's September. I don't know when it's coming out, but we got that spending bill coming. What is it, $1.5 trillion? Oh, there's going to be some goodies in there. Oh, people are going to make some money on this one. $1.5 trillion. I think that's a number. I could be wrong, but there's a spending bill coming up. Do we have the money to spend? No, we don't have the money to spend. Is it going to get ugly? It's going to get real ugly. Is everything fine? Is everything fixed? Is everything under control? Do you feel safe with your money in the bank? Do you have a pension? Do you feel safe getting your pension? Well, look at the pensions might get the bailout from the U.S. government, but this pension envy thing, right? A lot of people are going to be angry when me and you, we got to pay for these pension people when we don't have a pension. They invested the money. I didn't invest the money for them. They could have given me the money. They could have given it to Tall Mike. Tall Mike would have put it in gold. I would have doubled their money. Their pensions would have been overfunded. You see, gold has outperformed the stock market 25 years, outperformed Warren Buffett for 30 years, outperformed the bond market, doubled the bond market for the last 30 years. But don't talk about gold. They don't want you in gold. Why? Because it's outside of the system. They can't steal your gold. They can steal your money. How do? They do it with the printing press, right? They start printing Printing, 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 right? Printing press goes brr. You've heard it all, right? Well, they're going to fire that up again, but it's going to be scary this time because they're planning 10 trillion. But 10 trillion, not going to be enough. Not going to be enough. So I double that number, 20 trillion. Well, it's going to happen when they pump 20 trillion into the system. As the system starts to come down, they're going to have to do these bailouts. See, we get that deflation first in the stock market, that deflation in the real estate market. Then we're going to print the 20 trillion, 20 trillion. What's that going to do? It's going to hyperinflate. That's the only option they have. They could default the real way, right? Just saying, hey, we don't have the money. Hey, things are crashing. Hey, let's see where this bottoms out at, and then we'll rebuild from there, which is probably what they should do. But nobody wants pain. Can't have any pain in the U.S. No, sir. We got a printing press. We're going to print, print, print. Will we stay the reserve currency? I don't think so. I think it's already gone, right? What is the reserve currency now? Reserve currency for tall Mike is gold and silver. If you can't afford gold, get some silver. Silver's going to 10x from here, easy. Maybe much more than that. It's going to slingshot, man. You see the gold is taking off. And I'm hoping for a pullback down to the 3,000 level. I don't know if that's going to happen. We might just take right off up to the 4,000 level. We'll see how it plays out. Anyways, I'm Tall Mike. Give me the thumbs up if you like this stuff, but punch that subscribe button. Get out there, buddy. Have a great day. We'll talk again real soon. Bye-bye now.